It's Thursday, September the 15th, so halfway through September.
Halfway through. I believe sometime next week is first day of fall, I believe, and I'm beginning to see some change in leaves. I like this time of
Yeah,
season.
this is a false fall we're in right now, though. I think we're going to get belted again for another scorcher next week. So enjoy.
Well, no surprise. The market took a drop earlier
Woo.
this week. You should not have been surprised about it. We have been talking about it. We've been expecting it. I'm sorry to say I'm not sure if that's the only decline we're going to see. I don't know if we'll see one of that magnitude again, but we will certainly see aftershocks and continued volatility into October. It's being driven by inflation. The story is inflation, 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 inflation.
Yes, and while the administration's been able to have fuel prices go down because people are traveling less and the strategic reserves are being used to keep the prices down, food costs are up, shelter costs are up, service costs are up. So it's very difficult to squelch inflation right now, and that's why the Fed is going so full bore at 75 basis point increases, which we expect we're going to see next week.
We made some moves yesterday that are strategic and tactical within a style of investment for the most part each and every one of you listening had in your portfolio. We are focused on what the style is called value. Value for simplification are those equities that are priced really well and are those that pay a dividend. Their style is to pay dividends, and they're known for dividend positions. Gibb did a good job of lining up all the ones we have in that category and then charting them and doing an underlying investigation of each. And tell them what you've discovered.
Well, we discovered we had some really, I think all of those were high quality value holdings, and you'll recognize the ones that we sold because we sold them across the board in our advisory accounts. And we moved into a holding that we currently already had with some of the proceeds, and then added another value-oriented style and put the other half in there. And it did a few things. One, it simplified the portfolio. We have fewer holdings. We actually increased the yield because the holdings that we moved into had higher yield. So I think we came away from that from a simplicity standpoint. We made it more simple in the portfolio. We increased the yield also, and we did not increase the risk in the portfolio.
On average, I would say we're probably now across the board in the 50 percentile category of equities within the vast majority of all our clients. We have outliers that are still in the 60%, and we have some outliers that are in the 40s. Conversations that we're having with you when we have reviews or when we have conversations, phone calls, is okay? Is the risk at that level okay? Where do we think it's going to go? Do we need to shave a little more off? Or in even some conversation this week, when will we start buying into the marketplace? We still believe we're a little premature to begin buys. We need to get through September, understand October, and then really get a sense of inflation and where inflation is going to go. Inflation numbers this month for August came in, and they were not what the market anticipated, so the market is really kind of going flat at this point in time. So we're watching inflation, we're watching what the Fed is going to do, we're watching a lot of data points, but I would say we're being more safe than growth-oriented at this point.
And we're in a weird time. Just everything seems to be exaggerated, and it's until the midterms come and go. I just don't see any market stabilization. So we're kind of in a holding pattern until we get beyond the first week in November and we get beyond what the Fed is going to do related to interest rate increases. I think we're going to continue to see them moving in 2023, but probably not at the 75 basis point level. Maybe they begin to taper.
All right, we're looking at a lot of data. We're doing it on a regular basis. We're answering all questions that are coming into us in phone calls and having reviews. But if you have a concern or a question, please call us. We're available and we can get together. We can Zoom or we can talk. We do it because we know it is your money.
And your money matters.
We'll see you next week.